Hello, this is Wasabi Boat Research, and today I am talking with Boomer, who is a partner with Hal 69K, aka 1500 Badger, on Foot Guns podcast and newsletter, where they talk about trading all things crypto, from crypto to natural gas to copper to anything you can think of. And Boomer, I guess your avatar says that you were a global macro discretionary manager, but I understand you also have some experience working in PE and other areas of the financial industry. So I wanted to have you on. I feel like you're one of those people I'm seeing more and more of on Twitter and elsewhere, who are kind of tradfi in quotes, but then have become more and more curious in crypto and getting involved in crypto to various degrees. So I'm really curious to hear more about your journey and kind of like explore your story as a window into people who are crypto curious from the traditional finance world. So thanks for chatting with me today.
Yeah, no, you are awesome. You guys, when you host the DeFi podcast, it's just exceptional work. And so, yeah, I ran a multi-strat fund, which means you're opportunistic. And so you can do public markets, you can do private equity. Basically, people are saying, here, take my money. I think you're going to make money with it. And really, you can invest in anything under the sun, according to the LP agreement. Although we stuck to global macro style, what's called discretionary, which just means at the end of the day, they're systematic, which is, you feed a bunch of data into some of the, relationship between oil and different delivery months. And then it's sort of automated. Discretionary means you're making the call. Like my best trade ever was an accident. I was looking at the US dollar yen, and I have mild dyslexia. And so I thought that, and man, Ray Dalio, the yen was at 75. And Ray Dalio was all, it's going to go to 50. And everyone was lined up on that trade. It was like a 4-year-long trend. And I was just like, no. We had an analyst who was like, no, this is bad for these following reasons or whatever. And so I thought I was going long the yen at 75, but I was actually shorting the yen at 75. And we rode that trade for a year and a half at 4 times leverage and got out at around 110. So my best trading was an accident.
So you put on this trade, and then I guess how soon after that did you realize that you had gone the wrong way and you were like, okay, you let your winners run kind of guy and just like rode with it since it was working?
Honestly, it was a while. I don't think anybody had the courage to tell me.
You were the boss and they were just like, all right, he's doing this.
Yeah. I mean, there's just not a lot of finance. Is kind of a brutal culture. It's got a weird, hazing component to it where it's very hierarchical. And so, I had a bunch of people who I guess worked for me. I didn't really know them.
So they weren't about to like question you at the board meeting.
Yeah, we on the private equity, like the illiquid investments, we'd have, investment committee type stuff. But as far as our trading outfit goes, I had the final say. I didn't do most of it. A lot of global macro is focused on the action of central banks, which I think don't matter. Like my whole theory, if you said, okay, why have you been successful in, let's talk business and trading, which are kind of combined. I would say a couple of things. One, I've never done business with anyone any male. The standard is different for females, but any male who dyes his hair. Now that may be, you're younger than I am, so that may be less relevant to you, but if someone will dye their hair, they're lying to themselves. They're going to lie to you, right? So I got that rule. And then my other rule is that I don't use any news or any like deep thoughts. I banned thinking within my fund in terms of trading. I haven't looked at quote unquote the news in maybe a week, and I have been destroying it trading wise. I mean, natural gas has been going crazy. I have bought 3,000 Ethereum the other night. It was a relatively short trade, but anytime you're up to that size, you just need to move a little bit. And I don't even know what Ethereum does.
Let's get into that a little, because we were chatting the other day. Like you were in this trade. Are you out of that now? You had gotten on this 3,000 Ethereum trade, and you're wondering if you should keep going. I guess Hal was like, yes, it's good. So are you got out of it? What was the catalyst for getting out of it? And what was your thought process there?
I had to go to bed. I'd got my third Moderna boost, and in order to alleviate the side effects, I took a Xanax. And someone on Discord, and I was like, guys, what do I do? And I think people who are cash buyer, non-levered participants in the Ethereum market were like, hold it till you die. And I was like, no, like I'm just in it for an hour, a couple of hours. And I ended up selling it, up 3,000 Ethereum, up $50 or whatever ish. And if I would have held on to it, boy, I'd be in enormous pain. Because I think I was no, I wouldn't be in enormous pain, but I'd be in pain. Ethereum feels to me like the phone that won't charge.
What do you mean by that?
I'm not confident. I always felt Bitcoin would retrace its all-time high. I'm still not confident. Something weird just happened in natural gas. A spread just blew out to negative 120%.
Mm-hmm.
Spreads can't be more negative than 100 spread. So that's the first time I've ever seen that in my life. So I just thought I'd memorialize that on this podcast. Okay, so what was your question again? Sorry, I've never seen that ever happen, ever.
So there's something weird going on. Is this like when oil went negative after the COVID crash? Like there's something weird happening in the market
and it just moved 20% back the other way. So somebody's got their 2,200, 2,300 contracts of this particular spread, and you multiply that by the price of natural gas, which is 62,000. That's a lot. So somebody just lost so much money, and now it's only down 82%, and somebody just made epic amount. I mean, somebody's whole year. And I that's the funny thing about like futures. It's a little bit different from or any type of leveraged instrument, or if you're trading crypto leverage, is that you can have a whole year's worth of trading in a 24 or 48 hour period. If you're really willing to get out on the knife side.
Yeah. Let me ask you this. So you said you don't look at the news. You try to kind of just get in the zone and trade and look at, I guess you're looking at charts and stuff. So, but how do you pick what you like to trade? So I know you like to trade oil, copper, natural gas, and then read some crypto stuff. But like, what makes a asset or a commodity a good thing for Boomer to trade?
It just needs to be volatile. I'll trade I'm an opportunistic person. I will trade anything, with the exception of immoral things. So I will never be long rice, wheat, corn, or whatever. You drive the price of rice up, and people starve. I mean, and like, good luck convincing yourself that it's all capitalism when you're like literally driving the price up of a commodity that might starve people. In this case, I want to see the end of fossil, so I have no problem. I mean, I know high energy costs tend to impact low income folks more heavily, but I want to see the end of fossil fuels. So I want oil to go as high as possible. And when oil's high, that's when you really see solid investment. So I'll just go around looking for anything to trade that sort of looks appetizing. I mean, Bitcoin was relatively simple. It went down from 50%. It got cut in half, and I bet 5 Bitcoins that it would go back to its original high. Sold shortly before the return to its high. Done. I mean, that's all the thought I put into it.
Do you ever get into trading like the VIX or things that are just volatility itself?
No, that I have never gone. I'm a weird flat price person. The thing is that for some reason, people think when you add complexity, you can increase your returns. I think the opposite way around, right? So, things that are historically high priced are going to get more expensive. Things are sort of low priced are going to get cheaper, whatever. And so it's when you start doing things that are really out there, when you start sort of getting involved, and I mean, e-minis are extremely levered. They're $50 a point, and the size of the contract is for today it is $228,000, and you only have to put up $13,000 to trade it. So if you put up your 13, 13
Just to
grand to
explain to
trade.
people who might
Yeah.
not know this, so the E-mini is like an S&P 500
Yeah.
future, right? It's like a levered S&P. Okay.
Yeah, and it's got inherent leverage. You're not borrowing money from anyone. They just make you put up $13,500, and you get to buy $228,000 worth of a basket of S&P stocks for delivery in December. But it functions as if it's taking place in the present. My point is, with something that levered, why do you need to get cute with volatility? Why do you need to trade options? Why do you need to gamma get into the Greeks? Why do you need to do these weird esoteric trades when that's a lot of, if you want to step up to the plate, that's plenty of risk, right? And you have a 50-50 chance of being right to begin with, right? When you buy or sell. So if you can just edge that out to maybe 55% and not have a terrible risk management system, you do pretty well. So that's been always my thing. It's like every time things get complicated in business or trading, to me, it becomes not a boom asset. It's because it's just too like, why trade that when you have this, right? That's one of the reasons why I'm not, MetaMasking. It's because Bitcoin was so obvious. It just felt so obvious to me. I mean, something goes down 50%, bet that it goes back up. Done.
Mm-hmm.
And but that being said, I think the DeFi is the first thing that's ever been created, and I'm a DeFi maxi despite being sort of a non-participant, but it's the first thing that you can just follow along and enjoy. Like you really can't follow the price of oil and sort of trade it in your head or have conversations with people about it on the internet and get really any joy out of it. You can absolutely learn what Olympus DAO is, and you can absolutely learn what Badger DAO is, and you can absolutely, it's like Star Wars. It's all these great characters, exotic universes. It's almost like one big role playing game or something. So, and it's very democratic, and I'm a democracy maximal. So I think even if you're not trading on DeFi, I mean, a lot of people are just hold, right? They just take whatever they can out of their paycheck, route it through 1inch or whatnot, and sort of try to hold it till the end of the time. A lot of people, I think, are throwing darts. Like you see tweets from people who are like, a few years ago, I took $10,000 and bought the top 10 cryptos. Now I've got more than that, or something. But DeFi, I think, is phenomenal because I think we don't know what the full relationships that are being created online. I think once people it's kind of cool because it's anonymous or whatever, but once people get more comfortable with it or whatnot, will turn into real friendships. And I think that will turn into even other types of business and technology investment besides the cryptocurrency. And as proof, I'd offer, I was a big part of what's called the weird Twitter. Sounds strange. It kind of was. We all tweeted as character, and I have an account that's got over 100,000 followers, which I'll never disclose what it is, but we just write jokes. And there's no memes allowed. There were clear rules early on. No memes allowed. No stealing tweets. No self-retweeting. And we formed this little community. We all became friends in real life, but for a long time, we didn't know who each other were. So, like, my best friend online turned out to be the editor of the Harvard Lampoon, and was younger than I was by a long shot. And he's writing for SNL now. But it was all this anonymous thing. We're like lifelong friends. He wrote me into a skit at my name. But so I think DeFi is like this whole new international world opening up, that when you hear criticisms of the big criticism of DeFi is the following. You have X protocol, which allows you to take Y token and turn it into Z token, or which is the token of a protocol or whatever, but just mix and match. And that you put $1 into the system, you got to pay your Coinbase fees or whatever. And all you're doing is just sort of recycling dollars, right? And people are like, but fintech. And I'm like, Zell's working just fine. I'm not sure about all that. But so what? So what? I don't think that even if that's even if that criticism is true, it doesn't take away from the fact that you've got people who are in a democratic, transnationally democratic. Imagine if we govern the world like I mean, the people, Sushi Swap or whatever council or whatever, they withheld or they pushed back a meeting so the people in Asia could participate. Imagine if we governed the world like, and it's I think that even if it sort of all comes down in the sense that everybody wakes up one day and is just like, I just got a bunch of coins that I can trade for other coins or whatever. That in and of itself is an amazing, wonderful thing, don't you think?
Well, I mean, let me push back on this a little bit because, like you said, I think it sounds like one of your criticisms of DeFi is that you're putting $1 in through Coinbase and then you're just kind of like converting it to these other tokens or shit coins that anyone comes up with, right? But you and Hal, as part of Footguns, have created your own token that is basically usable by you as a currency for your newsletter. So you're on your Discord, you're giving out your Footguns tokens to subscribers, you're giving it out as rewards to people who are helping you out doing different tasks in Discord and making NFTs for you and doing all this stuff. And that strikes me as something that is fundamentally different than just trading $1 around, because that token is not backed by any dollars. That's backed by kind of like the community of your newsletter.
No, Wasabi, I should have totally prefaced that with, that's some people's criticism. That's not my criticism. And I would just love to have a big enough platform where I could take those people aside and say, okay, so what if you're right? These people are promoting transnational democracy. That's the downside case. The upside case is they're promoting transnational democracy and they're going to get incredibly rich by doing it, as opposed to some asshole like Elon Musk, who just is an asshole. So I would just love to have the kind of platform that somebody does on social media or the media or whatever. I could go on CNBC and say just that, which is, okay, it's all one big fucking joke. And you're right. Tulip mania, blah, blah, blah. But behind it all is something, if it all goes to shit, it's not going to all go to shit because these are real lasting relationships that people are forming. And it's in a time, I think, when democracy is under threat around the world, it's totally democratic. You have you can participate, not participate. It's just a wonderful thing. So, I'm not making the case of the sort of, it all leads back to nothing. I'm just saying, what if it did?
And then the worst thing that happens is that you form these networks of people who are hacking stuff and making projects. Yeah, for sure.
Yes.
I mean,
and you're the future of the world. Like, you're the future of the world. Like, we have demonstrated. I say we. I'm not really a boomer. I'm Gen X. But the people who are in charge right now have demonstrated that they're unable to fix complex problems together across international boundaries. They were much better at doing it, say, in the 1980s, right? But they're not very good at doing it. And you guys are doing it all right now. So even if your accounts go to zero, I don't think you're gonna walk away with that. I mean, you're involved with Badger DAO, right? Aren't you dealing with people who are like on the other part of the world that you would have never met if it wasn't for Badger
for
DAO?
sure. I mean, that's like one of the eye-opening things is like, you start getting involved in crypto. I started with this Twitter account and then got more involved in Badger, and like eventually it starts as anon, but then pretty soon like you're on calls with people and you start to figure out who these people are, right? And that is probably like the number one thing that made me bullish on crypto and DeFi is like you start to realize that like these like anonymous Pepe the Frogs that you're talking to are like secretly, coders at Google, people who are in like Goldman Sachs, like some of the kind of like smartest people who are in, kind of like moonlighting in crypto while they're doing their elite jobs, in the real, so like these are people that are not just random kids in their parents' basement, right? And some of them are, but like
about that. Can I ask you a question about that? So, do you think their real self, like a guy who's in doing a Badger DAO, I'd say as a Goldman trader or whatever, is his true authentic self in DeFi, and he just sort of does Goldman to make a living?
I I don't know. I think it's probably case by case, but certainly like the Anon thing lets you kind of slide into this world without thinking about, for example, like one of the reasons I'm Anon is like I have another Twitter account that's just like my personal Wasabi in real life Twitter account. And there's like my in-laws are on there, my friends from high school are on there, my random like former coworkers at other places are on there. And you start talking about crypto and it becomes very polarizing, right? Like I've got some hardcore environmentalists, Bitcoin is burning the rainforest, your NFTs are killing the seals things, right? Like you've got people like that. You've got people who just don't care. And so like it's easier to just kind of silo this little crypto identity and, then it kind of takes on a life of its own. I mean, my crypto Twitter is not by any means big, but it's much bigger than my non-crypto Twitter, right? And I can see it continuing to grow. So I don't know if it's making the real version of yourself, but it's just making a version of yourself that can fully participate in crypto.
Well, if it's your true version of yourself and you believe in promoting these ideals that DeFi mean, innovation, collaboration, democratization, then that gives me a lot of hope for the future, a lot of hope. And I feel like that's the saddest part about all this. All the people who are crypto skeptics aren't seeing it. They're not. They've just written it off. And so they're very alarmed about the rise of autocrats around the world and everything, but they don't know DeFi exists. And it gives me a lot of hope because I think, you're trusting your dollars and they may be your YOLO bucks. You may still be working at Goldman, whatever, but you're trusting your dollars with you're trusting strangers. And we live in an age right now where I don't know if my dentist or something was wearing a MAGA hat, I would go see another dentist. You know what I mean?
So it lets you like that's another thing. Like I found it lets you kind of leave your politics at the door. Like I found that whenever I've tweeted political shit on my crypto Twitter account, it's like the least engagement. Like people just don't give a fuck. Like I see people really radicalized against the banks and against tradfi and against kind of like crypto regulator stuff. But like it's interesting. It really has formed this kind of like cross-cutting, not red or blue, but like this kind of like crypto political identity, which I think is really interesting. And probably like thinking about my own political voting and stuff, like I would probably vote on the crypto stuff as probably my main issue now. Just in terms of people's stances on that.
I know. And you know what? I'm writing an article in real life about that for publication. I think just to keep us anonymous, a buddy of mine is the chief of staff for a senator, and this senator received more telephone calls around the crypto provisions of the bipartisan infrastructure bill, the tax parts, than they have over any issue, including 2 impeachments of Trump. They got more phone calls about that. There are going to be participating in the 2022 midterms, in the 2024 presidential election. They're going to be actual like crypto voters, and 1 out of every 10 people essentially took their Trump bucks, Biden bucks, whatever they were, and put it in crypto. We know that from polling. So you think about that, and it's about 7 million people, and that's like the exact margin of Biden or Trump. And then you look at the states and the electoral college, and neither party is engaging with crypto people. Neither party is. I mean, you've got some people like a Senator Wyden who I think gets DeFi, but he's from Oregon, which kind of has a dual identity. It's a kind of redneck place and a super liberal place, but nobody's talking to crypto voters. They're up for grabs, and that's what my article is like. These people, there's enough of them to sway elections. So why is it we're hearing about the child tax credit? Why is it we're hearing about all this other kind of stuff? And it's like, Elizabeth Warren, she's anti-crypto, right?
Definitely. I mean, she's definitely pro regulation, nanny state, and has kind of like the consumers need to be protected from these crypto predators vibe,
right?
Which
if she spent a day in our Discord, maybe she changed her mind. I don't know her, and she's not a friend, so I don't have a dog in that fight. I just think I think you have to do it's the catchphrase of the day, but do your own research. And I think both parties, if they don't those voters are up for grabs, and if the parties choose to ignore them, they do so at their own peril. And for people who are more lefty like me, again, DeFi is like this great moment of global hope. Like maybe if you can create a a system of currency, a method of trading, computer protocols together with people from all over the world, it's very difficult for me to see you taking up arms against a person who's in a country you've interacted with badly. Do you see what I'm saying? It's easier for me to see your generation below you, whatever, actually meeting the challenges of climate change because of their experiences with DeFi. Is that fair?
Yeah, I don't know. I mean, I see most of the people that I'm interacting with as English speaker. Yeah, like with Badger, there's a Spanish group. I know there's like several people in Asia, and there's some people tweeting in those languages and stuff. But I don't, can't talk to them one on one and calls and stuff. So that's a little bit harder. But let me ask you this. So you're talking,
Sure.
we're getting into regulation a little bit, and I know you have kind of argued that. So what I think is happening is like crypto is growing so fast. They're basically taking like the Uber approach. They're kind of saying like, screw you, we're going to expand as fast as possible. We're going to deliver so much value to so many people, to 7 million, these people that are getting their stimulus bucks and putting it into crypto, right? We're going to give these people airdrops. We're going to get them so rich and so onboarded into crypto so fast that it will turn into this constituency, right? And I think you and Hal have argued a little bit in the newsletter that this like this stuff that Coinbase is doing, like they really need to take regulation seriously and do it by the books. So how do you like which is right? Is it the kind of blitz scaling, get as big as fast as possible, and then worry about the regulators from a position of strength? Or is it, hey, slow down, we got to like step by step get Gary Gensler to approve each thing we do and make sure it's kosher?
Yeah, so I'll take that in two steps. First of all, I disagree with the very premise of your thing, the analogy to Uber.
Mm-hmm.
Uber is a terrible company that had a toxic workplace that forced people into taking terrible wages. You've gone up now or whatever without health care, et cetera, et cetera, et cetera, et cetera. They also probably prevented a lot of drunk driving. So there's some good stuff Uber did, but Uber was centrally planned, venture capital backed, all this other kind of stuff. I don't know if what you're talking about, if you start off a question that way, I think you're almost missing DeFi because there's no one who's in charge. That's the whole point, right? Or if there is someone in charge of a particular protocol, it's a governing council. And then if you own the token, you have a voting bit, right? So
right. I'm not talking about the company itself and like how they're governed. I'm more talking about if say Uber is coming to a new city, right? And they could do one of two things. They could go to the taxi cab commission and say, hey, we have this new service. We'd like to get permission to launch and start giving rides in your city. And like, what are the incumbent taxi cabs going to say? No, like fuck off, right? Or the same thing with Airbnb, right? If your Airbnb said, excuse me, Washington, D.C., we're going to launch in your city. Can you like create a permit system for us to do that? They would say, it's not going to happen, right? So what they do is they said, okay, we're going to launch. We're going to get so many people onboarded and liking our system and getting value from it that you couldn't imagine going to a city and there not being an Uber, right? Like when I go to a city or a Lyft or whatever, or a ride share, right? Like they're creating this new utility that's just so ubiquitous, so much of a value add that there will be a constituency for it. And you saw that, I think, in California, right? When they passed that initiative that Uber was supporting to get I forget what it was, some kind of like, worker protection thing or independent contractor thing. But, like a new technology asking permission or building it, and then by building it, getting a constituency, and then coming to the regulators and saying, okay, here's what we've got.
Well, I think the regulation is supposed to be enhanced always. I think people forget that regulation is supposed to, provide for a smoother experience. And so the regulation should follow the product. In other words, Coinbase is an entirely separate matter. I mean, they were clearly doing something that they had to register They got really mad about it. They got everyone mad at everyone at the SEC, and all they had to do was register, and they chose not to, which is fine. But it was clearly met the definition of a federal statute. Now you can say you don't like the federal statute or whatever, but the way that Brian, I call him Brian Coinface, the way he said he was entitled to a meeting with the SEC chairman, like it's the whole attitude, the amount of fees, like that trade, that 3,000 Ethereum trade I put on, I paid $700 in commissions to CME Group. I would have paid $19,500 to Coinbase. That's fucked up.
Have you looked at using alternatives to Coinbase, other exchanges like FTX, or not like the DeFi stuff, but the other exchanges that have let you get high leverage and this sort of thing?
Yeah, I have, but I think that I either want to be an installer of MetaMask and DeFi, and we kind of made the decision at Furkons a while back that if I went down fully the DeFi road, and that's why you do the DeFi podcast with Hal and all that, is if I went down that road, then I would just be a bad version of y'all. Like, I'm here to provide the trading perspective and say, you know what, I'm sensing that Ethereum's the phone that's not going to fully charge. I mean, it's had this opportunity to go back to its all-time high now like 20 times. And it just feels like, to me, I've seen other assets do this. And so that's my value.
So what does that mean? It's going to crash, or it's just going to kind of keep sputtering along?
It could be sputtering. It could sputter. It could go to 36,000. I don't know. But right now, as of today, it felt like, and we had a Footguns private pod around trading around this. This felt like gold 2011. And the analogy was to Bitcoin, but Bitcoin and Ethereum are almost sort of viewed by Joe Q crypto participants. I'm not sure they know the difference, really. They know they can afford more Ethereum in theory. I mean, you got tons of people who don't even know they can buy part of a Bitcoin, right? But this feels a lot like gold 2011, where you had this enormous swoop up, and then you had a total inability of it to get past that big high. And until Ethereum proves me wrong, I don't think that's a bad insight to share. That, hey, maybe you should, if you're thinking about getting long Ethereum, maybe now it's not the right time. I almost think it's a better buy at, say, 5,000, because then it's proven a thing.
It's got momentum.
Yeah.
Let's ask this. So there's kind of a cliche in crypto podcasts. Whenever they get someone from like the tradfi world on, they got to grill them about, are the institutions coming? So you've got friends, I presume, from your fund career. Maybe you're on Martha's Vineyard with Jamie Dimon, or those kind of people. What? Give me like on a percentage. What percentage of your TradFi colleagues or former colleagues are getting onboarded to crypto curious, actively buying crypto, trading in their personal account at
100%, 100% on a personal basis. Now, if you're a long short equity fund, you can't buy it, because your investment mandate is to buy and sell stocks, period. And if you started buying commodities or currencies or whatever, one weird thing that I've noticed, this is completely strange, is that if you stop and think about this, if it is indeed cryptocurrency, if Bitcoin is a form of currency, why, if you have never traded the yen or foreign currencies, why do you think you're going to be good at this? They're like every coin. I guarantee you, 99.9999 repeating percent of cryptocurrency users on Coinbase have never traded, which is really weird, right? I mean, it's like it's a strange thing to contemplate, and everybody I know who's actually a forex trader doesn't trade crypto. So, but everybody I know has some exposure to cryptocurrency and TradFi. And I mean, and one of the things that makes me so bored, it's just like with natural gas. A couple of days ago, went up 13% a day for money, and I kept calling everybody, being like, "Why is this thing going up?" And everyone's like, "No reason." Nobody could identify a reason. And I've seen people who are pretty well known, like journalists who I know, go and publicly say, I'm not into crypto, and then email me about whether or not they should be long.
So there's this like public shaming effect. It's like the shy Trump voter, the shy crypto trader.
No, but it's much more pervasive, which is this kind of like this like it's because of that period between 2017 and 2000, right? It's because during that time, you had a few friends who were into Bitcoin or whatever, and it was kind of like, okay, whatever, I'll buy it at $10, and you sort of whatever. Then it became serious, right? It went up to 17,000 or something, and then people like Hal went along for that revolution. Now I've known Hal for a long time, and one thing that kid is not as stupid, although he does have a cousin Greg from Succession vibe. It's kind of hard to pick up if you've never met him. But the only people who were around in crypto at that time were weird scammers. They were like fake bots. And so you had a lot of people who were finally joining Twitter, because Twitter was one of those things where it existed for years and people were like, what is that? I don't really know what that is. I know what Facebook is. I know what Instagram is, but what is Twitter? I have a Twitter, but I don't really use it, or I follow celebrities or whatever. Anyway, my whole point is when people are doing something secretly where they're publicly contradicting, when they're saying, I've seen prominent people be like, I think crypto, blah, 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 and then literally, text message me, should I buy Ethereum at this level? It's like being long liquor during Prohibition or something,
So to put this together, TradFi is in crypto in their personal accounts, but they're not able to touch it because of all these kind of institutional barriers. Like, do you think, 5-10 years from now, the traditional hedge fund is like doing long short equities plus trading dog coins, or is it like there's going to be these separate crypto hedge funds that are off in a different part of the universe?
Well, there are separate hedge fund crypto guys. Jeff Dorman runs that Arca Capital,
right.
Producing phenomenal returns.
Are these silos going to stay up for good?
Yeah, I know some global macro guys, discretionary guys have Bitcoin in their funds, but they have a mandate they can go out and buy. They can go out and short. I don't know, Czechoslovakian real estate if they want. I mean, so they have a broad investment mandate, probably no more than 1% allocation. Paul Tudor Jones is a former global macro discretionary guy. He recommended everybody put 5% of their money in Bitcoin. I think that's the general consensus among global macro managers. Then you have the Man Group, which is probably the largest hedge fund group in the world. Bridgewater is the largest, but it's in the 100 billion category. And they've actually affirmatively come out to the Financial Times. I think people missed this article. And they said, we think crypto has no value. We trade it all day long because it's tradable. And I thought that was a funny statement, because they're like, they've designed entire quantitative strategies around trading crypto, and they don't believe it has any value. So that's the kind of stuff where you go, that makes me really bullish. So the answer to your question is 100% on a personal basis. Some, yes, on a global macro discretionary basis. But the guys in long and short funds just simply can't. They have to buy stocks. If they buy, a currency, that's a violation of investment. 5 to 10 years from now, I don't think it's possible to say there will be more crypto funds, probably, but long short equity funds would really underperformed. I pulled all of mine out in the beginning of 2020, and have really been underperforming for a really long time. I guess the bigger question for them is, what does their future even look like? Stock picking doesn't work anymore. Everything's consolidated into momentum, fangs, right? Like, it's very hard to be a stock picker. Yeah, sure. There's some examples to provide, but the sort of mutual fund, let's analyze the balance sheet all day long, and that would be the more profound question. Like, what is the future of mutual fund stock pickers when everything seems to be so momentum driven and dominated by a few small companies?
Yeah, I'll tell you that this is kind of a personal story. I have just there's some family money that I just became a trustee for. And this has been managed for, 50. My grandfather won some money a long time ago and was set up a bunch of these trusts for his descendants. And it's not really a lot of money, right? It's single digit millions, and it's got maybe 60 or 80 people that it's supporting. So it's managed by a big bank, national US bank, and they're basically in a 60-40 portfolio, except they charge you a fuckload more fees because like they'll be like, okay, we're in 61% equities and 39% bonds, or we just added a 1% allocation to real estate because we think that's going to do well. So then they charge you like 1% on top of that. When I was like, they could be in Vanguard. So
right. No,
yeah. So like, this is just like, and I raised this with them, and then they give you a runaround. It's just like, it's criminal, right? So if one thing is radicalized me against banks, it's shit like that, right? It's just kind of like this.
Well, I would say there's a hidden history there that you probably don't know a little bit about, and that is that everybody, only less than 50% of households own stock, and now that number is much higher. You had what was called right up to the .com era. You didn't have a financial advisor or an allocator or whatever. You had a stockbroker, and equities were viewed as these sort of just random things. Like cryptocurrency reminds me a lot of the .com era because that's when the rise of the individual investor happened. It would cost me $100 to sell a single share of stock pre-1990. And there was this kind of healthy respect in the market, in the world for the stock market. It's like you can't win over a long period of time. It's really, really hard. And so people who were individual investors were kind of on the bleeding edge of that anyway, if you were actively buying and selling stocks, because it was so expensive. And then you had Charles Schwab was the first discount brokerage who said it's not going to be $100, but we're still going to have people. Then they rebranded the entire industry. Like they formed a thing, and they came up with financial advisors. It took them a while because people kept calling them stockbrokers. But after a while, it sunk in. And so a lot of it's CYA stuff, cover your ass, so that, if you're managing a trust or whatever and you put it with Morgan Stanley Private Wealth Management, then you're like, well, I put it with Morgan Stanley Private Wealth Management.
Yep.
So you don't have to explain sort of losses. But what these people don't do is they never short anything. They cite that same stupid statistic about stocks that on average it's up 10%. If you sold today, but keep in mind, if you bought in 2000, it was 2010 before $10 became $10 again minus inflation. So you were net down. You had to go to 2012. That's 12 years of dead money. And so if you bought, good for you if you bought in 2004 and sold at the right times and all that kind of stuff. Stocks stayed down at the same level from 1929 until 1954. So the whole Modigliani or whatever it's called approach to portfolio management, I think is stupid. If you would have come into my office and you would have said, I want a conservative portfolio, and I was a private wealth man in 2007, I would have been like, okay, well, bank stocks don't have anything. I'll put you in Citigroup and Wachovia and Merrill Lynch. We'll put maybe 10% there, and then we'll take maybe 20%. I know what'll never go bankrupt. GM, General Motors. So we'll buy some unsecured bonds for General Motors, right? Gone. And the world's largest insurer will buy some debenture for your fixed income portfolio. Vaporize. The safest portfolio in 2007 was just gotten vaporized. And so I just, after living through that and going through that, I have a very suspicious view towards private wealth management and asset allocation, because they always say, cash is just losing money. They're always citing that same 10% thing, which, yes, if you sold today and bought like a gazillion years ago, but you have these periods of dormancy that can last multi-decades, right? So I couldn't agree with you more about the private wealth management industry. And if anything, they need to add crypto exposure, yes, but they also need to add some short exposure. Like buy a few out of the money puts on the S&P or something.
What does your personal portfolio look like? Like you're trading, how much are you have a passive position and you're trading some fraction of it for fun and to stay active? Or are you trading your whole net worth on the line? Like what?
All of it. Yeah. Yeah. All of it. I got a bunch of money in a checking account and then a bunch of money in Interactive Brokers. Two different accounts. One I call the yellow account, where I overtrade like 10% slippage due to commissions because I'm just rapid fire trading, and then more long term Interactive Brokers. But long term to me is like a month. You know, I don't know.
And
I've
you
never
don't
done
like
the
stocks, right? This is
buy 'em
all
and
in
hold 'em.
like commodities and Bitcoin stuff.
I don't believe in stocks. I Yeah, I don't like stocks because I think there's a lot of manipulation around. I mean, you're legally allowed to as a market maker price of stocks, but how do you really know who's telling the truth about their balance sheet? How do you really know? Oil is oil, and this is where this is what has concerned me about the crypto markets is the market microstructure. I don't know anyone who's ever sold it. Do you?
I've sold a lot of Ethereum to buy NFTs and for gas and for other. My problem is I get Ethereum in my wallet and then I buy shit with it. So then I'm shorting Ethereum to sell. I'm
Right.
selling it to buy other.
No, but no, you're not. You're not. You're actually not shorting it. So you're using it like a stock. Like when you have a stock, you get $10 and you sell it and go buy another stock. That's not shorting it. I don't know anyone who sold Ethereum who's been like, except me. I mean, I don't know, which is why I look at. I'm like, there are these wild moves in crypto, and I'm like, I don't know anyone who's selling this. Why is it down 10%? Who's what's going on there? Like it just feels a little weird, and that just goes back to your point. I don't own stocks, individual stocks, because it's not a good market. Futures is a good market because you always have to have one short and one long. Like right now, you create the contract. If I go buy a contract of oil, I'm buying. I'm saying I'm going to take 1,000 barrels of oil off your hands a month from now, and you're saying I'm going to sell you these. Now we're never going to actually do anything with that. We're going to close the contracts out before they expire. But you have someone who has it's a well functioning marketplace because you have to have someone who has a negative view and a positive. Crypto to me just has you can either it's just like it's sort of shown on the Discord. I tried to short Ethereum on Interactive Brokers, it wouldn't let me. If you want to short the futures, you have to have 4 times the size of the future in margin. It's crazy. So it just speaks to me of maybe an imperfect market. There's that problem I'm still having with the way they report volume. They report volume in Bitcoin as being not Bitcoin or real Bitcoin, but they also include the future. Well, you don't do that with stocks. So the real market for Bitcoin per day for actual Bitcoin is like $9 billion, but they report it as being like 90 because they include future. It's like, where is that a thing? So it leads people to think it's a more mature market than it is. And that's maybe not the question you asked, but these are all like my pet peeves. I might want to edit some of this out because I say this a lot on our little private podcast a lot. I come back to
No, I don't. I'm trying not to edit, dude. I'm trying to get like Joe Rogan where I can just record for like 4 hours and just it's all good and like
I don't know who
you
that
need to go take a
is.
piss. You don't know who Joe Rogan is? He's like the king of
No.
podcasting right now, dude. It's
Yeah,
like that's like you're a golfer and you don't know who Tiger Woods is.
yeah, no, I've played all top 20 golf courses and hated every minute of it. Like, well, but I played all 20. That's a big thing I'm into is like you have to have done something to talk shit about it. Like you can't be like, oh, the new McLaren sucks. Okay, if you've driven it, you can say that, but you have to go do things and then you can say they suck. So when I played Augusta, which like no one is ever able to do, and hated every minute of it, I can tell you, right?
You
Like,
you don't you don't like Elon Musk, right? Have you driven a Tesla?
yeah, I have. It's a terrible car. It's like it makes me nauseous.
What you driven a
Uh
Model S or what?
I've driven most of them. They're all whatever the ugly one is, the ugliest one. I don't know. They look like weird. I don't know. I'm all for electric cars. I mean, it's ridiculous. I don't like Elon Musk because of his sort of bro authoritarian MAGA adjacent. Fuck you, California. They don't have unions in Texas, but oh, by the way, Texas also has a report on your neighbor abortion law. that's like the Stasi. And I don't, I mean, and he played, he took a lot of people for Dogecoin rap. Maybe some did well, I don't know, but it's like a joke. And I think there's some people, particularly in the lower income range, there's this, like, Elon Musk doesn't care about you. He doesn't. So why is this? There's just a weird worship of. And anytime there's a weird worship of somebody, like an individual, I mean, they're not even really like worshiping what he represents, right? If you liked Elon Musk because you said he was a pioneer, he really wasn't that much of a pioneer. There was a guy before him who was exactly as crazy, named Andrew Mason, and he was a CEO of Groupon, and he got laughed off basically the face of the planet. He would do crazy things like go to investor meetings and play his guitar and like show up to CNBC wearing shorts and whatever. And he was basically Elon Musk just a little too early, and Groupon suffered. There are 1,000 Elon Musks who've tried and failed. I don't know why this particular guy was successful. But the way he sort of just played around with Dogecoin, I think, you read these stories about people who put their, like, I don't know, life savings in Dogecoin. I don't know what Dogecoin is doing. That is, to go back to your other point, I do have friends in institutional traditional finance on the global macro side that will not touch crypto because of Doge.
That's the one. They want to get into Shiba Inu, but Doge is too red hot.
They're just like if there is a $1 billion worth, picture of a dog, I can't take your picture.
I bought I think Hal did too, the fractional Doge NFT. Have you talked about that? Do you know what that is?
No, I'm still learning what NFTs really are. I don't think. Yeah, let's do you.
I want to ask you about NFTs. So number one, do you own any? You're a wealthy individual. Do you own any expensive art, like physical art? What do you own? What kind of art? You're a Damien Hirst guy.
No. It's one of my old neighbors in Greenwich had a bunch of Damien. Damien Hirst is not a bad figure. You don't want to single him out or anything. I have a Liechtenstein. I have my favorite thing to collect though are Native American Indian ledger drawings, which are the first sort of the Plains Indians contacts with white people. Kids drew that and on little pieces of notebook paper. And they're very, very expensive, but they're very cool and historical. That's probably the most that I have. But yeah. So yes, I do.
So you weren't completely telling the truth when you said all your net worth is in your Interactive Brokers and checking. Do you consider an art like, so do you have a distinction in your mind between like this art? Do you see the art as like part of your trading, what you're doing? Like, are you trading this stuff? Or are you collecting it because you love it and you want it in your house and it's not something you would ever sell?
Yeah, no, collecting to get it off the public market so I can give it away.
Mm-hmm.
Just to give it away. Like I've got the ledger. I don't have like the ledger drawings on my coffee.
Mm-hmm. Do you have them in storage somewhere?
Yes, and some are on permanent loan, like the Met. Permanent loans means I still own them, but they're basically at them. You can go see them at the in New York.
So you own these. Do you own any NFTs as Boomer?
I don't.
You own it. Footguns has NFTs, which you're a partner of, but you don't have a wallet. You don't have a wallet at all, right? You're all on.
I don't, and I don't. But I think I'm going to change. I feel like a couple things. One, I really want to see this succeed, and I tend to be a bit of a flip signal sometimes. And I feel like the second that I install MetaMask, everything's going to go to shit. Yeah, and I want to see it thrive. Again, I'm very committed. I really believe in this move towards democratic self-collective government, whatever you want to call it, and absent, the making money part. And so I'm worried that I may jinx it. And I think NFTs are fantastic. I think fractional NFTs get a little masterworksy or whatever that thing is, but I think NFTs are. I mean, it's kind of a weird. Like, do you like art? Do you like a specific type of art? It's a mode of owning said art. You can, same with the Mona Lisa. I mean, you can take a picture of that, but it's in the Louvre. I mean, I don't know. I don't have that much to say about NFTs.
Really, as a real life physical art collector, but you believe that NFT art, you would put it on the same status as like the art that you collect, right? Like there's no fundamental
Oh
difference,
yeah,
or is there? Okay.
yes, yeah, the crypto punk that went for 60 million bucks or whatever, I think should have sold for $60 million. What I can't figure out is why baskets go for over 100 million when you can get a school of Delacroix or school of Titian. In other words, it might be a Delacroix, it might be Titian, these old masters that look just like the real famous ones, but they're unsigned and not really sure who made them, and it's not clear whether Titian actually painted his own paintings, but whatever. You can buy those for like, I don't know, $150,000. And Basquiat was this heroin addict who took street art, was the first street art. And the kind of people who buy Basquiat are usually outsiders, and they like identify with them. They're usually like new money, and that's what I can't understand. But doing a $60 million crypto NFT makes total sense to me in the context of art and art history. I was an art history minor, and I absolutely think that was valid, and I think the ETH rocks are cool, and I think NFTs are fantastic. Right? Who hates the? You can choose not to participate in things in anything. Basically, you can choose not to participate in the buying and selling of stock. You can choose not to participate in cryptocurrency, but it's a really weird person. It's almost like it's like militant atheist. They spend an awful lot of energy trying to prove something doesn't exist. Like I understand that, whacked out Christians because they're like, really believe that, you're going to go to hell or whatever, right? But the anti-crypto people are so weird. Like, could you imagine spending all of your day just being like, Bitcoin is tulip mania? What's wrong with those people? This is fun. I'm having fun. I would have never met you if it weren't for crypto. This is fun. Footguns is fun. Why would you root against this? What kind of an asshole do you have to be?
Yeah, I was gonna say, like, I make NFTs for this podcast art, so I'm gonna have to send you one. So you're gonna need to get a wallet for that, unless you think we're gonna tank the markets.
Yeah,
But
I'm legitimately concerned about taking. I'm not joking. This is not a joke.
I'll send it to the Footguns address. But so it's kind of like a tarot card themed art. And so I was like looking for artists who are doing these, right? And I found this one that I really liked on Instagram. She has a website and she's doing all this art, right? So I just followed her on Twitter. And then a couple of days later, I was looking to just like, find these people that I had followed to get some inspiration for these different designs. And I was like, I can't find this person. And so I went back and did some digging, and I found that she had blocked me. And I was like, what the fuck? Like, I never even tweeted or said anything to this person. So then I kind of started going through her history, and she's just like an anti-crypto zealot. I felt discriminated against. Like, she had blocked me. I'd never said anything to her. She had blocked me because I was like a crypto avatar.
Why?
What does that say?
Yeah, there is a serious. Some people ascribe it politically motivated. Some people ascribe it pandemic motivated or whatever. But I think the world, the nation, or whatever is suffering from a lack of the ability to experience joy, and I'm all about like looking for joy and wonder. What is joyful about shitting on someone else's parade? I mean,
Yeah.
what kind of weird, like, what kind of weirdo do you have to be? I can absolutely. There's this guy, very intelligent, writes a spicy Financial Times newsletter. Robert Armstrong, we correspond a lot, and he just absolutely just LOL Bitcoin every other day or whatever, and it's just monotonous. I know who he's writing to. I know his audience, and so I know his audience. Is more sort of like, but it's just like it's repetitive. And people are enjoying it. P.S. If it is Tulip Mania, what's wrong with Tulip Mania? I mean, Holland still exists. And not only does Holland still exist, on surveys, they're the happiest people in the world. So I'm not even sure what the problem with Tulip Mania was in the first place. I mean, somebody exchanged, a house for a tulip bulb, but like, so any given time, you can find some professor at some college or some guy or whatever to call something Tulip Mania. Anything.
Yeah, Tulip Mania trutherism is a big part of crypto podcasts. There's a guy, Nick Carter. I think he has he's like, Tulip Mania was not that bad. It was very isolated. I forget his full take on it, but yeah, it's interesting. I'm reading this book. It was recommended to me by, I forget who, but called Devil Take the Hindmost. So it's like a history of financial speculation. And one part that I was listening to yesterday when I was making dinner, he was talking about the South Sea Company bubble. And he was like, when that popped, it went down to like 15% of the peak. And I was like, 15% of the peak, like that's like a normal crypto retracement after like a boom, right? That's like I'm like, when I have my allocation to crypto, like I try to make sure like if this went to 15%, that like, like my crypto money is not money that I'm like putting food on the table money, right? It's kind of like something else that could go to zero and comfortable. So I mean, I'd not be comfortable, but I'm not going to get thrown on the street.
No, but I feel like that's why our most recent Footgun thing, we said, I'm so relieved. I no longer have to have the conversation ever again, because Bitcoin went up to 64K, and it was the question of would it ever sort of go back up there again. I now no longer have to ever have that conversation. I don't see any problem. I don't view crypto as being super speculative, to be honest with you. I mean, you've got a sort of it may be if in the user interface, like the only thing you can really get people with on crypto now is exit, and so I don't view Solana as being highly speculative. If you think I don't think Solana is more speculative than Tesla stock. Is that wrong?
No, not at all. I mean, I think the word speculative is problematic, but like, yeah, like these networks, I think these networks are going to be around for the rest of our lives and well into the future. There's a need for them. It's a question of which one is going to, is this going to be like a situation where Microsoft takes over and there's going to be one winner, or is it going to be, Bitcoin could get an upgrade that would allow it to do smart contracts and it could, take over everything because it's the market leader. I don't know. There's like a lot of, or we could be fragmented, right? There's a lot of different ways that could play out. So
there's a lot of different currencies. I think the creepiest thing about these bubbles is that there's been one in every 20s for the last 4 times. There was one in the 1920s, the 1820s, the 1720s, and the 16th. And I mean, the French stock market. Imagine these people like being sort of static in the past in their financial speculation. The French stock market was a crazy place. Speculative finance has underpinned a lot of things like one of the reasons inflation was so bad towards the end of the 60s and beginning of the 70s when Nixon did the price controls to get worse was because of the amount of debt we had to issue to fund the mission to weird stuff. The whole history of finance is fascinating to me. But where I put that, when I read a book like that, I just read a book like that. I don't then say, well, I'm going to go look for the next South Sea bubble or whatever. I think that that's some of the worst stuff you can do. We have a guy who I don't understand it. I don't want to speak ill of him. He's a paid subscriber of Footguns, but everything he emails to us is about how crypto is a scam. Mm-hmm. And I don't know why he's in a trading newsletter, paid trading newsletter, but he keeps quoting from like Warren Buffett, and I'm like, Warren Buffett gives incredible advice to other people who own insurance companies and use its reliable cash flow to do M&A activity. Like Warren Buffett is Warren Buffett. Don't take some shit that he said. And for a guy who's like, you can't time the market, Warren Buffett has had an impeccable timing.
Yep.
like impeccable timing. So the portability of ideas, that's why I think you got to respect DeFi. And I don't think you can, you don't need to fit, if you want to put DeFi in any box, this kills me. This kills me that there's not someone with efficient platform like a Bitcoin Maxi or an Elon Musk who is not taken to the streets, the airwaves, the CNBC, Bloomberg or something, and not talked about the flourishing transnational. You want to talk about ESG? DeFi is the G. I mean, there was a guy on Bloomberg talking about an ESG fund in China. I was like, you can't have an ESG fund in China. They have people in concentration. You have to have E, S, and G. You can't just have port, right?
Mm. I think you need to do some. Like crypto catfishing. So you're talking about all these people who are like shitting on crypto, and then they are asking you about owning it. You have to like start outing these people. Just Get him in a chat. Get your Financial Times guy asking you for Dogecoin picks and shit.
Yeah, no, I mean, I think I would ruin the relationship with them or whatever. But I just think that argument needs to be reinforced over and over and over and over and over again. I just wish I had the the audience for it, because then I think that person wouldn't block you, because they would know that you're a financial participant in a democratic movement. And how could she hate them? If she hates democracy, then fuck. Sorry, don't mean harsh language, but screw her anyway, right? Like, I don't want that friend. But if people would view DeFi as a democratic movement, which it is, that has an economic component as an aside, not as its core, then I think we'd have a lot less crypto stupid people.
Yeah. Let me ask you this. So you're in Foot Guns, you're seeing, all this DeFi activity, you're excited by it, but you're not participating in it because you want to stay at a remove. But what do you, as the Boomer fund manager, what do like the DeFi boosters get wrong? Like, what do you want to scream at them to stop fucking making this mistake or anything like that? What do they need to learn?
Realize gains. Realize some gains, folks. And stable coins are still not the US dollar. If you've got some pretty good profits in something, then convert it back to dollars. I mean, this is not a forever trade, right? And so you see a lot of people bragging about their unrealized gains. People do this all the time with stocks. It's not crypto, but they're like, yeah, my stock portfolio is up so much. I'm like, okay, until you sell it, it's not up, right? Or until it becomes back to US dollars. Now, maybe there's a point in the future where, Bitcoin is US dollar, fine, whatever. That's a maxi argument. But I think, the only thing I say about DeFi folks is that as you're experimenting, if you find yourself winning, actually do a little winning, like it doesn't have to be just, if you can trade this stuff. Now, if you don't like trading, that's a whole different ballgame. And what you guys are doing is so important, because that's what makes me want. It's like, Hal will be like, I'm up 1,300% in ICE. I'm like, fucking sell it. Stop talking to me about it. Like you should have sold it up 200% or something. And I get it that, crypto is a little bit more like options, in the sense that you have to maybe put out more trades to get more win. Like options traders make, they lose 9 out of 10 times, but the one is enough to keep them going. So I understand that, but people sitting on large unrealized gains, I think drives me.
So realized gains, not just into stable coins, but into US dollars. So what do you say to the people who, quote unquote, denominate in ETH or denominate in Bitcoin as their base money? And then that this goes to the macro, like, a big theme in crypto is this kind of like macro fudding of the US dollar, right? Central banks are debasing the dollar.
They're
fudding means fear, uncertainty, and doubt. So to FUD something is to spread fear, uncertainty, and doubt about it, right? So like, the Bitcoin maxis are saying money printer go burr, dollars going down, inflation, hyperinflation, dollar is trash, get into crypto as your base asset.
Yeah, all I gotta say is, have you ever held, how much money, actual dollars, you ever held in?
I have in my pocket had an envelope with like 15K in it.
It's pretty cool, isn't it? Like dollars, like touching them, feeling them, and seeing a big display. And I was going through on other podcasts about how much a Bitcoin, how many square feet it would just take up, 66 square feet of $100 bills next to each other. That's where I think that's the other screaming part. It's like, it's the dollar, bro. It's okay. The dollar is very strong right now, and it needs to weaken. But it's extremely strong versus most of the currencies, the crosses that matter. And the dollar is the best friend to crypto. And so people who denominate ETH, fine. But why would you, I guess my question would be, why would you do something that people, well, I guess this is maybe like the bankless ETH maximum, which is even foreign currency traders denominate they take profits in their own currency. Like if you're a yen trader at JP Morgan or Forex trader or whatever, you're judged in dollars if you're based in New York. You're judged in dollars if you're based in Japan. But you don't sort of crawl into the system to the point where you're like in the yen, so to speak. So if you take the bankless point of view, maybe that makes sort of sense. But I think coexistence is the best argument for crypto. It's like this is a trade. You really can't trade the dollar. There's a Dixie index or whatever. But in terms of pure speculative action, that's Bitcoin. Do you want to use it to pay for, I don't know, a car or something? Fine. Send money to El Salvador? Fine. But for me, it's just another speculative instrument. It's really, really cool. And unlike gold, it's finite supply. So it has all these unique features to it that make it pretty cool. And it also obeys the laws of trading, right? I mean, I literally made a bet, went down 50%, it would go back up again. Like, how many times have you done that on stocks? A lot, I would assume. I mean, or something like, so yeah. I mean, that's that. I mean, Bitcoin proved itself as that was one of the questions the FTE guy asked, is whether Bitcoin was a real asset. Hal and I did this great podcast we never published. We've done like 20 of them we never published, and I don't know why exactly. It's lost somewhere. But we talked about, Bitcoin as real estate, and he was talking about is Bitcoin in a real asset class, if it's digital gold or whatever. And I responded saying, well, no, Bitcoin doesn't depreciate. That's why people like real assets, because there's tax bonus. You can't depreciate Bitcoin, I don't think. You could depreciate the servers that mine the Bitcoin. I don't think you could. And so it's better than gold in that sense, until it's proven not. But I guess my thing is, the thing that makes me want to scream too is that we need the dollar. We need enormous financial calamity to make our Bitcoin worth more dollars that aren't worth anything. Like, that doesn't even make sense, right? Like, we need the value of the dollar to get cut in half to double the value of our Bitcoin, so we can convert it back into dollars, because that's the only thing people are really going to be spending over the next half decade. Maybe there's a new world that emerges where you go into McDonald's, I don't know. But for now, Bitcoin maxis, I guarantee it, if they're up, if they put on the trade that I did, took their profits in dollars, right? So people that lack of coexistence, the skepticisms towards government, it's like the whole Pelosi. People are pissed because her husband got 10 pre-IPO shares. I've gotten 30, and I haven't even done business with the banks that give them to me. They just want my business. And it's just like, God, do we have this level of distrust? This woman is like 80,000 years old, If she was some money hungry person, she's the current Speaker of the House. She could just go be a lobbyist and make like $30 million a year. It's not about money, like that kind of stuff. That's why that stuff drives me crazy. It's just like, whether they're on my side of the aisle or not, most people who go serve in Congress go there because they really actually want to make a difference. And it's worked out for us pretty well, with the exception of some pretty shady stuff in our past and our nation or whatever. You don't have to hate government to enjoy capitalism, like they can coexist. So that would be another another rant. What other trad, like I am actually kind of a big deal. And so what tradfi questions do you have? Like, give me some tradfi questions. Like, people who wouldn't go on CNBC and tell.
TradFi questions. All right. I want to hear about when you ran a fund. So I've had some people that I've talked to that are, stock pickers or whatever, and some of them are running funds. And the thing that they tell me is, like, basically, like, you think when you start a fund, you think that you're going to be like the stock picking guy and that's going to be your job. But like, your job is really to like suck up to your clients and like tell them the right shit, and like your job is to keep being a fund manager. And that means like writing them letters or doing all the client shit to like keep them around, right? When the market tanks or whatever. So what was it like dealing with clients? How did you keep your clients? How did you get your clients? And what was like the hard part about being a fund manager?
That's a good one. So I up and went into finance with no background on the illiquid side. We added trading separately and sort of brought them together on a multi-strat platform. But I didn't really have a finance background. I just took extreme risks. And then in terms of, yes, running a fund, yeah, there's it's a business. A lot of people have this weird, like, Harry Potter vision of what it's like to be a hedge fund manager. And it's ultimately a business. You have to hire people and fire people. And yeah, you have to go on a lot of boozy golf trips with investors who you don't like. And, you do spend a lot of time doing that, but ultimately you are the guy who makes the final decision. So if you know anybody who's managing a fund and doesn't have final say, that's weird. But in terms of I got to the point where I was just like, and most people don't. They just keep going. They can't stop. They need more, whatever. They just get in this mindset. It's almost like you'll never become a fund manager if you're the kind of guy who would stop becoming a fund manager. It's like people who think, oh, I'll just join organized crime for a little bit and peace out. Yeah, that's not how that works. But I did, and I did so in a weird way, and I just was like, I'm going to go to a little cabin in a place that I've always liked, and place in the beach in the winter, and buy. And I don't think a lot of people have done that, and I'm enjoying it. And I got get to do stuff like this, which is a lot more fun.
Do you do any like VC or private equity or real estate investing aside from your trading? Why have you stayed away from that?
I've been thinking, and you're talking to an extreme bull coming out of 2008, 2009. I mean, extremely bullish guy. But I had been thinking even prior to COVID, like, when is this going to stop? I mean, the longest bull market I'd ever seen was the the 1990s in my lifetime. In some ways, if you look at it, depending on the reference point, there was a bull market that basically lasted from 1980 till now, definitely in bond. And I just got the feeling around 17, 18, I was like, how much more to this cycle can we go? And it looked really intelligent what I did, right? Get out in 2019, got out of our last illiquid investment in 2019, right in time for a pandemic to destroy everything. Would have been great timing, but the pandemic has juiced up everything. And I think part of that is because, like, there's mental inflation that takes place if you are no longer required to go into an office, if you're no longer required to interact with people. I think the biggest bubble that I've ever seen in my lifetime is right now venture capital. I think it's just insane. I mean, there's a new $1 billion unicorn every day, and I don't have any confidence that I could select the person to select those very well. I want to short venture. I want to figure out a way to do that because, everyone's trying to run around and do the big short. They want to be like the guys in the movie and the book. But the thing is, you should never short a market just because you think it's overvalued. In other words, like, you're forced to be short. But if you can find a market where nobody's short, you can't even short it, you should short it. You should find a way to short it because that means that the market's not healthy. That's what I'm saying about crypto. I don't know anyone who sold Ethereum. So it shouldn't move 10% in a day. And I don't know whether that's a function. And I don't know. People talk also about decentralized finance. The largest decentralized finance system in the world is foreign currency. I mean, there's $4 trillion that changes hands a day, and there's no single exchange for the euro. You get a different quote from JP Morgan, from Goldman Sachs. Now, a lot of that's been taken out and into Bloomberg terminals and all that kind of stuff, but you can still arb that out. And so that's why I was kind of initially skeptical when Hal brought up decentralized finance, was I was like, that already exists. Just call JP Morgan, ask them for a quote on the euro, and call Morgan Stanley. They'll give you a different quote. I think most people think that there's a foreign currency exchange. There's not. And so I see this as being, people who have extremely online people, a lot of gamers, a lot of it's this weird LARPing stuff. And it's really, really, really cool. But I just wish, I'll say this again, sorry, but I just wish somebody would get out there and be like, this is a pro democracy movement. It's a pro technology movement. It's a pro, um, you know, good movement that has economic aspects instead of it's that's all you ever hear about crypto is its economic function, right? You don't ever hear about, unless you get like the weird crypto utopians, right? Who are like, Ethiopia, all you have to do, they should adopt Ethereum as their native currency. It's like they're still going to have whatever problems they had yesterday. But yeah, yeah.
Let me let me go back to the tradfi. So you're got a question for you. So you're running this fund at a time when places like Renaissance Technologies were coming up, right? With these with some completely automated strategies that are built and the algorithm executes it. Like how aware were you of that when that was coming out? I just read the book The Man Who Solved the Markets about that guy and the development of that. Yeah. So how did that change the game? Or were you doing any of this algo trading too? And how do you see that coming into the TradFi world?
No, I thought about bringing Hound and over because he was a quant and having a quant shop because a lot of fund complexes just get bigger. Like private equity guys are now venture capital and all that kind of stuff. One of the things that is the biggest, lamest excuse for poor trading performance is the bots did it to me. I mean, I won today, and there were bots all over the place. Like 33% of the traffic in oil are algorithmic traders. I won in oil today. Natural gas, gasoline, I'm heating oil, etc. So all that stuff was happening, and I kept hearing people make excuses. People left trading. They're like, I can't beat the bots, all this other kind of stuff. And it caused a real problem in 2007, when these stat arb guys, so statistical arbitrage guys, the big joke about quants that no one knows is that they all have PhDs in astrophysics, but their trading systems are like algebra. They're like basic math. And the people who run the quant funds are not quants. They're like people who are good with investors. So they don't even know what the people are. But you're paying some guy, oh wow, he's got a PhD from Caltech in particle physics. Well, he's doing a VWAP based, volume weighted average price based buy and sell automated program where, anyone who went to State U and majored in geography, if that's a major or whatever, could also come up with the same program. I mean, all algorithms are just if blank, then blank, right? The problem is when you forget to close the loop on high frequency trading strategy. So when you see bots sort of emerge or high frequency shenanigans, it's when they withdraw the liquidity. So whatever little if blank then blank reaches its maximum pain point, and they just go, I'm not going to play anymore. And those are buying opportunities. It happens all the time in natural gas. Natural gas is just swoosh down, and you're just like, just buy it. So I think the whole, my life, the bots ruined my life narrative among, discretionary traders and flow traders. I mean, prop trading at the end of Dodd-Frank got rid of people. Like the idea, people used to think that if you were a trader on Wall Street, somebody just gave you an enormous amount of money to go speculate on. That was never the case. The majority of traders are flow traders. They're facilitating institutions buying and selling things for a commission or a spread, or they're taking some risk on for the bank. Flow trading is extremely boring. I mean, it's just answering phone calls all day long and being like, well, we can, take a little bit of risk on this trade and put it on our books and try to profit off this customer this way. But that's one of the challenging things is you call up a trader and they want to know why you're selling. They think you know something that they don't. So it's hard to sell things to people over the phone.
So when you see them coming in, you're aware that these bots are entering the market, how do you adjust your trading, or what are the, what do you see on your screen that says like, okay, now we're trading against bots, and do you kind of adjust to try and exploit what they're doing, or how do you adjust to bots entering the game?
Yeah. Yeah. So what they do is they just amplify. They don't create. They just amplify. So right now it's 3:51 Eastern time in the United States, and the people, a lot of the action takes place. A lot of the volume is in the last 8 minutes. So you'll see larger than average moves in the last 8 minutes, and you can trade the last 8 minutes if you really want to. I mean, I'm not that guy who loads up on, I don't know, $10 million worth of S&P minis to, get 5 points of movement at the end, but they definitely create time frames, and they definitely amplify normal participant behavior to the point where it can help you optimize when you exit and or enter a trade. So if oil has pulled back from where you want to be exiting and it's a pretty good day though, then you can bet the bots will drive it up at the very end of the session. Oil still closes at 2:30, but it trades 24/7. But except the weekends, it's weird. But people still treat oil as if it trades between 9 and 2:30, and so bots will come in, and there are strategies that only participate in the very end of the trading session when there's all this volatility and volume. And so you can, if you're in a winning position, it pays to hold it through the end of close that particular day. Potentially is one way you could benefit from that. On our trading rules, which I don't know if Hal gave them to you, but one of them is there's no excuses to this stuff. When people are like, oh, people are short covering, that's not a thing. There's no short covering rally. Markets go up, they go down. And when I was growing up, the people had a very healthy respect for the mystery of markets. You would never hear a nighttime news anchor say, markets went up today on speculation that blah, 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 blah. It would just be like the Dow went up today and we don't know why. Because you can't call every market participant and say, why is this up? In fact, the best trades you can ever execute, I think I mentioned this earlier, but call 10 natural gas traders if they have no idea why it's up, by it. I mean, it's going up. Anytime you read something in the Financial Times and then try to develop an investment thesis around it, I just don't think that works. It's never worked for me. And I think people have financial success, and price moves first and then the explanation happens later. So if you're waiting for the explanation before the price, then you're already behind, I think. So, oil crashed in 2014. It crashed because the dollar started to strengthen and it started to go down and it got carried away and it just became a trade and everyone jumped on short oil. But then people had to explain it, halfway through the trade, people started explaining it. Well, there was this OPEC meeting. There was this realization that there were too many rigs in the market. Those same number of rigs have been there for the last 7 years or what, so this need to explain every phenomenon, which is a human thing, right? I think impedes people's progress in trading. I'm a big personality of the asset guy. So oil has a certain personality. It struggles. You'll see all the time, oil will stop around, it has trouble getting past .2. Today's high was 84.51 at 50, and then plus or minus like 1 cent or whatever, and 1 cent equals $10 of P&L on oil. So it's not like a stock. And so oil has a personality. Today it had a supply report that was not good, but it wasn't as bad as it was. So it could basically do one of two things. It could, overreact to the supply report, which it did, and then return to its previous high, or it could overreact and continue to overreact. And I bet that it would continue to overreact, and it did. So it has this personality. It can only do certain. If you can get to know oil, or get to know Bitcoin, or get to know stuff. The reason I think it works is because it's a closed system. It's not like people up and decide to become oil traders on a Tuesday. there's a relatively fixed group of participants in the system, and their collective behavior makes an asset have a personality like a person. And you can usually predict, if you know a person, you can usually predict what they're going to do in a given. So that's what underpins everything for me on trading. That's what I would attribute all of my wins to, and losses is not respecting that personality. If natural gas is going down, it's down 3% today, don't go long it. It's never paid for me to go long if it's like getting crushed. There's no value investing commodity. I mean, if they've gotten just blown out, maybe, but natural gas has been doing stuff. It reached, $6.50. It hasn't done that since 2014. So you would have lost on that trade for the last however many years, and all of a sudden it just comes to life, and then you clear out your whole schedule and you stay up late and you don't shower and you make a bunch of money, and but there's no value investing in in commodities. Let's put it that way.
Well, Boomer, this has been really fun. I have one last question for you, unless there's anything else you want to go over that you think I missed. But you talked earlier about like your risk management rules of thumb. You talked a little bit about your trading rules. I'm just curious, like, what other rules have you developed for yourself, either for risk management or like this rule you're talking about? You don't try to backfill from a news article, follow the price. Like, what are the other like trading rules of thumb or things that you try to stick to that you've developed over the years?
When you're right, you're always more right than you think you will be. So if you imagined Bitcoin as having a large value, I bet you were more right than you thought you would be. You thought maybe, someday, 10 years from now, it might be worth $100 in the video, or $1,000. Well, it got to 68. And that's true of every trade I've ever been in. So one of the biggest challenges of trading is forcing yourself to hold on to unrealized gains. Now, I said earlier, it drives me crazy the way DeFi people won't take gains. But when you're in a trade, you want to ride it as far, and it makes you physically uncomfortable to hold a trade. Like you're just like, you want to throw up because you're looking at so much win. And your first instinct, if something pops up, is to sell it and pocket it. And so that's a rule. And then truth is price, and price is truth up until a certain point. I don't think the S&P should be trading at 45.54 or 45.44. I think stocks are wildly overpriced right now, but I'm not short. I was short and I did really well, but I realized we're in a bull market. You're not going to call the top. You can get indications the market is stalling out and it's going to go down for a whoosh, but don't expect it to go to 2000 like that. It's not, nobody really saw 1929 coming, right? And so price is truth and truth is price. So you can have all these theories about why something's happening, but if price disagrees with you, price is always right. And you just have to respect that. That's about that. Those are probably my biggest rules. And, a lot of people will say in terms of trading, well, whatever system works for you. I don't think that's right. I think there's like successful trading strategies and there's not successful trading strategies. I mean, I think there is an answer. And yes, it is true. If you're able to predict the future value of an asset by flipping a coin, then keep doing it until it doesn't work. But I think certain time-tested things, but a lot of it's spending time developing the personality of an asset. Like oil's down $2.55 today. And it's not a good time to go oil value shopping. Oil is not happy. Leave it alone. Don't short it. It's already down quite a bit, but I know that from years and years and years of oil trading. Just log out. Probably knowing when to log out too. And in terms of technicals, I don't. Hal uses technicals way more than I do. I'm more of a big believer in round numbers. Oil will struggle with $85 and $80, and Bitcoin will struggle with $30,000 and $40,000 and $50,000 and so forth. And so you should be particularly patient about that. And yeah, this is actually the entire sum and substance of the conversation that I wanted to have after 2 hours or however long we've been talking. You don't believe in technical analysis, right? Or you don't like or something, right? You're skeptical, or
I want to make investments and leave them alone for a period of time and spend my day building and contributing to projects that I care about. And I want my investments to be working for me and not have to be sitting in front of the screen trading, right? I want to make an investment and forget about it because I'm not a trader by profession. Like I would give money to a trader that I trusted and respected to trade for me, but I just know fundamentally, like especially dealing with leverage, you need to be in front of that screen when shit hits the fan so you can unwind positions. And like I just don't have that lifestyle. Like I've got young kids, I'm out, I'm traveling. I just am not the kind of like 10 screen guy, staring at the charts all day. Like my skill set is like marketing, communications, helping contribute and build to projects that way. So that's what I want to be doing in my day-to-day life.
No, that makes total sense. I when you put it that way, it makes total sense. I think Hal and I had a conversation where you like denied the existence of W bottoms or something. Like those are real. I don't think you have to be sitting in front of the screen. In fact, I didn't trade for that Ethereum trade that I put on at 2,100 and sold at 4,000 that crashed. That was a pretty long hold, pretty leveraged. I had 50 Ethereum for, I don't know, better part of a month or so. And I used a W bottom on that one. And then used a large round number, 4,000. I was just like, it got back to 4,000, then gilts off again. It did. So I think technicals, there are people. Hal is constantly looking at charts. The charts are their visual representation of price because he's constantly online. He's a constantly in front of his computer guy. I'm not, but I still use technicals. I still look at things like double tops, and you can still optimize even if you're more of a long-term holder. You can still optimize your entry and exit points with technicals. Like you should. I think you should think twice about Ethereum right now. I really do. It is moving sort of up and to the right. It's sort of trending up, but it's had like, how many times has it had an opportunity to exceed that previous high, right? And that's a technical analysis argument. Now you might say, also with Ethereum on a fundamental, this is the thing too that I think some traders I know are trading crypto and they're just using technical. But this is where having Hal around is great, because he's like, no, this is what this coin does, or this is how this works. And there is a fundamental case in each case for crypto, right? So Ethereum facilitates transactions, yada, yada, yada. The one reason I was an Ethereum maximalist before it was cool, but as I came in the crypto world. But now I'm kind of like, all I ever do is hear in our Discord about people bitching about Ethereum fees. And I'm like, how valuable can something be when all I ever hear is complaint, right? I mean, I don't know if, can you have a thing be worth $36,000, which is what Standard Chartered Bank, Hong Kong Bank thinks Ethereum's going to do, something like 24,000, 36,000, and have everyone bitching about it? Is that possible?
Yeah, I mean, the Ethereum maxis would come back to you and say that isn't it just an illustration of how valuable it is that people are willing to pay $150 for a transaction? That the block space is that valuable that it's like would be like you're a New York real estate owner complaining about traffic, but like the traffic exists because you're in this hot area.
Right. No, that's a phenomenal point. You should make that point on every podcast you're on. That I've never even thought about it that way. It's like, yeah, wow, that's kind of mind blowing.
All right, well, Boomer, this has been fun. Hopefully, the first of many conversations. It's kind of like an interesting podcast collective we've got going on, and it's awesome that we're able to collaborate on these. And look forward to chatting with you again soon.
Absolutely. So, thank you so much, Wasabi, for not only this but everything that you do for foot guns and DeFi in general. Go Badger! Okay, podcast is done.